one man saying that is fine. If that's your opinion and you're not in it, that's fine. But there is an entire market of millions and millions of people that agree that it is a store of value. So, you can think one thing, but there's also a market, and markets tend to become efficient over time.
We do know that you will always get paid in Hex on a daily basis. And that is truly the miracle that we call Hex, because it is trustless interest, trustless yield. Nothing will stop that contract from running.
Welcome into the Creed of Crypto podcast. We have a special edition here for you this evening. As you can see, we've got three heads here tonight, not just two. It's Boi Crypto, Crypto Ewok here with me as always, and our special guest, the man, the myth, the legend, Axis Alive. Axis, how you doing tonight, man?
I'm doing pretty incredible, man. It's been, like I was saying before, it's been a pretty crazy 24 hours for me. Some crazy stuff going on over on the Axis realm, but yeah, man, things are heating up for PulseChain. You got this whole P-Dai and Atropa system that seems like it's starting to really kick up, and it's about ready to go break the all-time highs from when PulseChain just went live originally, and we were still trading really like illiquid pairs, and so we're at those levels again. Amazingly, I think it's up like 100,000% or something. So that's been a interesting thing that's been going on. And then, of course, with the SEC and Richard Hart case, I'm sure there's plenty to talk about there as well. So I'm looking forward to it, and thanks for having me on.
Absolutely, yeah. Thanks for accepting the invite. Obviously, I'm sure we're going to have an active chat here tonight. If you guys are here, hit the like on the way in. We have a lot to talk about, a lot to cover tonight. As Axis outlined, we'd love to hear from you guys as well. So hit us up with your questions. And yeah, we're going to get into the juicy stuff, obviously, with the PulseChain ecosystem. But I want to get into some meat and potatoes about the overall crypto market with you right now, Axis, because today it just kind of made sense for me to go here, since we were going to at some point anyway. So the CPI data comes out today, slightly hotter than expected. So not really that big of a deal either way. But it does kind of lead us to the question, and we don't even know what those numbers really are. I don't know that anybody really believes some of the CPI data, but it does lead to the question of, what do you think Jerome Powell and the Fed may do at these next couple of meetings? I think we have 3 left here in 2023, the next of which is just a week from today on 9/20. But what do you think the Fed may be looking to do, with still a 90% expectation that they still will pause rate hikes here for this next meeting? But through the end of the year and then into 2024, what do you kind of think the expectation might be from the Fed?
So like what I'm looking right now, and I'm seeing that we're basically at 2000, like summer of 2006 levels. And it stayed that way for an entire 12-month period. So a full year. Rates stayed around 5.28%, and that's interesting in and of itself. The other historical data about just this relative level that we're at is like going back to like 1994 all the way until the year 2000. Rates oscillated like just slightly north and south of that same 5.28 level for, what is that, like 6 or 7 years. And so, this seems to be based on going on now 20 years plus of data, a region where the Fed historically likes to keep rates stable. And so I could definitely see 2024, end of this year, 2023, where rates will stay relatively stable. That means like marginal rate hike or marginal decrease or just a pause. But I think generally we're going to oscillate around this 5.25 to 5.3 region. And what does that mean for crypto, and what does that mean for like the dollar index and things? Well, usually if the rates are high, then the cost of money is high, and if people are getting really good payouts in the bond yields, they want those payouts to be something that's valuable or going up in value, which would explain why the dollar has seen such a surge here in the past. How many months has it been? Just since May, basically, since it bottomed. So or it was
Right.
something like, let's say it was bottoming in July. So yeah, so it's been a crazy rally on the dollar, and that's taken risk off the table for cryptocurrency, and it's caused problems for the stock market as well, and even gold. So the gold's been in a retracement, but it also performed tremendously well since last October. So another one that's been interesting is oil, right? Oil is on a huge tear as well, and that you know how oil and the dollar are kind of tied together in a lot of ways, and it is like the main source of energy in the world, and so it makes sense that the most prolific fiat currency and the most used energy source are kind of somewhat tied hand in hand in their rallies and their sell-offs. So maybe one will lead the other. We could, you could always go into a deeper analysis on that. But in terms of like risk being on or off right now, it seems like risk is off or neutral. And, this is like an inflection point for the markets where the inflation, the Fed funds rate is kind of the leading indicator, I think, for what's to come.
Yeah, it makes a lot of sense. And I want to get with assuming that rates will be like relatively static, whether there is any more slight increases. I don't think we're going to see anything in an increment other than like a quarter of a point is what we've been seeing for a while anyway now. But I want to ask, like, as far as this upcoming cycle in crypto, there's been a lot of talk. I think I've heard you address this. Obviously, your friend Sami has been talking about this idea a lot. Bob Lucas, actually, creator of the 60-day cycles, or he talks about a lot for Bitcoin anyway, talking about the possibility of this left translated cycle possibility where we may get a quicker top sometime after the halving, not early next year, but earlier than we would think next year. That maybe the top of the market for a while and possibly catch people off guard. When I saw Bob Lucas's most recent video, he actually, I think before he was kind of split on what scenarios he thought would transpire, whether it was the left translated cycle or kind of our more normal traditional cycle where we see a top deep into 2025. Do you have any thoughts on this, just kind of based on the macro environment? Does the macro environment like heavily weigh into what you're seeing there? Or, all these different things kind of coming together right now with what we're seeing with BlackRock and these ETFs and these new ETF applications. What do you kind of see as the chances for these different outcomes in the overall crypto cycle coming up?
Yeah, so like in terms of just to address the ETFs and like a lot of the interesting like news pieces around that, and a lot of the wins coming out for the crypto space against regulators, it's really kind of uncanny how the crypto is now all of a sudden being accepted and they're winning cases left and right. And all at the same time, it's like your biggest funds in the world are submitting applications for ETFs. So that's already an interesting setup. Now, in terms of left translated cycle and what I see for specifically the crypto market going into the next couple years, 2 to 3 years, it really hinges on something that Ben Cohen talks about, which is like the liquidity that's out there. And if you look at like the Fed's balance sheet, that's like one of the charts I like to look at to measure, are there more or less dollars available? So it's kind of an ultimate squeeze. So like you can't live in your crypto, you can't eat your crypto. So it's really the most liquid thing and the first thing you go to sell when you need cash to survive, right? And so until there's an excess of liquidity, I think it's going to be hard to get everybody globally on board to start aping into risk assets. And so what does that mean for crypto? That probably means that until one of a few things happens, either rates get lowered or QE, quantitative easing, comes back online, or you see some form of more easy access to money and cheaper money to borrow, you won't see the same cycle that we've seen in the past. That doesn't mean that we couldn't see an early market cycle top for Bitcoin in the next 12 to 18 months that would then eventually potentially lead into like a longer, more extended bull market that does not look like a traditional bull market that would last, and it would have a significant pullback somewhere in the middle end of next year into the following year. And then you wouldn't have your actual, liquidity that you need to make this thing happen until after the presidential election cycle's closed out and you have a new sitting president here in the US. and financial policies have shifted, and perhaps that means lowered rates or money printing is back. And so I think, in terms of like social sentiment, like people are sick of the way that the last few years have gone here in the States. And there's a good chance that we'll see a complete change going into 25 and 26, which typically I would say 25 is the setup year, and 26 and maybe even into 27 is our traditional magical crypto bull market that we all know and love.
And I heard you say that. I forget where. Well, I'll let you go, Ewok.
I was just going to say. So you're thinking 2027 to be the big year.
I think the year that I keep talking about is 26, but a lot of the data is pointing to like, if everyone thinks 25, well, that's out.
Right.
So it's for sure going to be shorter or longer by a year in either direction, and then that could have implications for the beginning of that following year. Because remember, a lot of times this stuff completes in a December, January, February, like sort of time frame.
Yep.
Because it's all hinging on that tax season stuff, right? Because that's what usually happens is people profit take and they try to plan for tax reasons in either way. And that means either they're going to tax harvest on a loss in that December before, which could be year 26. And then the following year, you get that final blow off into May. Sell in May, go away. In 27, I don't know. But this would probably be the first time you've heard of something like that. But it's definitely, this is a ever-changing and dynamic market and a dynamic theory. So what I say today might be adjusted or changed based on what happens with some major macro play that, I have no control over in the next 12 months.
Sure, fair enough.
Yeah. People like to not let you forget that, though, if you change market views, though, as we know. But yeah, you're right. I have heard you mention that 2026 thing before. And, that's kind of tied to what we are seeing as far as the conditions in the market right now, macro wise. But I mean, do you think like the further that we do go on, we know obviously that BTC's gains are going to diminish over time, and they have been. Do you think even the cycles may just start to look, I'm not talking anything about necessarily a super cycle concept, but may not just be so cut and dried like we've been used to? Like I was referencing the traditional 4-year cycles. As we go on and all this asset class matures, I mean, do you think that kind of gets a little bit more gray as far as the timing and stuff like that?
Yep, it does. And the reason is because of the underlying Bitcoin mining economy. So like everything in crypto relies on the layer 1, layer 0 Bitcoin mining economy that is like the foundation or the roots of the whole system. Like all liquidity flows through Bitcoin first, essentially. And this would be a first for in terms of a crypto cycle where potentially another chain like Ethereum and all of its alternate layer 1 EVM chains that are kind of like parallel to it would have its own cycle built in there as well, potentially. But I'm not hinging on that. I'm just going with what I know, which is that Bitcoin mining hash rate globally is at all-time highs, and Bitcoin price is not at all-time highs. And typically, one of the biggest catalysts for what drives price appreciation for Bitcoin and thus crypto is the amount of that the halving has an effect on incoming supply. So there is a potential here because of the amount of Bitcoin supply on exchanges being on a downtrend now for 3 years, and it's like historic. Like we've never seen this low amount of liquidity for Bitcoin on exchanges ever. Since I think 2020, since the COVID crash, I think is when we've just started to see an accelerated descent away from exchanges, which means that large funds are custodying it and housing it away and believing in it more long term. And it's, Bitcoin made it, I guess, is what I'm trying to say. And so no longer does the halving have as much of an effect on, in terms of new supply coming on that could be a threat to price appreciation, as much as the lack of Bitcoin on exchanges multiplied by the amount of Metcalfe's law taking hold and user adoption by big billionaire types players could have an effect on price. So this will be like that first cycle where we'll see mining isn't, in addition to this, mining isn't the only thing that's going to drive price appreciation this cycle. It's going to be real demand followed up by a real shortage of supply. Now, in addition to that, the amount of like Bitcoin that's coming off this cycle is like it's going from I think 3.25 to like 1 point something. I'm going to check it right now, but you're not really the amount of new Bitcoin being issued is going from like, well, I got to find out what it is. Hold on.
Yeah, it's
Bitcoin
not much.
had,
It's not much of a decrease, actually, is what you're saying.
correct. And so then where do you get opportunity for gains in that dynamic is from the cost to produce Bitcoins on an energy level and the amount of initial investment that goes in. So this might be a unique situation where we have record low cost to produce Bitcoin because mining equipment is super efficient, and we have billions of dollars of investment funds that don't need to be paid back tomorrow, and that was probably borrowed at a much lower interest rate previous to the hikes in interest rates, because these Bitcoin mines were getting set up 2 and 3 years ago when Bitcoin was blowing up. And so I just think there's going to be so much less negative externalities, but I don't think it's the supply getting cut in half this time that's going to be a driving factor as much as it is shortage of supply out there in the market, and just cost to produce new Bitcoins is down low, so less needs to be sold. And I think it's really going to be quite the squeeze to see. Now, what that looks like to me is it's like a longer term thing. So we might get like 80K Bitcoin next year, and then we might sell off to 30K, and then you might get the actual real supply squeeze after the ETF's been launched and everything in a year, perhaps, and going into 26 and 27. Whereas like the real pinch happens because there just is not enough Bitcoin to go around. But again, there's two theories here. One is like an organic buildup going into 25 and 26, and the other is a double bubble cycle where you get next year is good, then a down year, or half a year down, and then the following year is good. Kind of like what we saw with 2019, but on a bigger scale.
Right. That is definitely a lot of food for thought, and I think it would be really interesting because, yeah, like you said, this idea. I mean, everybody. First off, everybody has 6-figure, 120K Bitcoin programmed in, and they also, like you said, pretty much have 2025 programmed in as the year. So either one of those scenarios would be pretty amazing. I mean, like for anybody that is keeping their head, like which we should in this market, keeping your head on a swivel, because you never know. I mean, you never know which way it's going to go. And
that's a really good point. And I think, not to cut you off, but just to add to your point, I think it's like this is why I'm here and why I talk about that thing is because it's like you can set up for either situation by having like a core portfolio position, like a hex staking ladder, which is like paying you into the future, hedging against any time frame and any price drawdown, because under the assumption that it does succeed, right? And I think because of like things like with PulseChain and the fork and the dilution between hundreds of sacrifice phases and Hedron and all these things that has been extracting value, and just the typical bear market, all these things been extracting value out of Hex, for example, in the PulseChain, and diluting it across 5, 6, 7, 10, 100 assets. That's like a once in a lifetime thing. Like now, once this work is done and it's out of the way and it's behind us, and you actually start getting real green candles to print, and then new users jumping in to get excited about something, it's going to start a train that won't be able to be stopped. And like all you're doing now is positioning yourself for an inevitable glorious bull run. Like, and it doesn't really so much matter what the time frame is, whether it's 24, 26, or 27, because you should be, if you're listening to this stream, you're probably properly hedged by having a ladder somehow in there, built in there for any of those situations.
I agree.
Yeah, well said. And that's something that's so interesting to me. I'm going to ask a twofold question here. So feel free to not go way too in depth with this, because I just watched you the other night. I think it was on ATX Crypto's channel with Crispy Man, which was a great stream. And he asked you, and I'm sure you get asked this a lot, but like how you did kind of get introduced to Hex, how you got introduced to Richard Hart and into the ecosystem and everything. And the other part of my question is, you just referenced Hex right there, obviously, as the way to mitigate that, keeping your head on a swivel idea, and how these markets, we think we know what they're going to do, but we really don't. It's interesting to me with you being like, a TA guy and somebody who really understands that. Not that that means you're Nostradamus or anything like that, but you also like the idea of time locking like that. So I think that's like a really interesting dichotomy with you. You're not somebody who, because we hear plenty of people out there that more so now that the Hex ecosystem, as far as like investors in it, has gotten much, much larger. There's lots of people out there that's like, oh man, I'm not staking. I'm not doing that. You're crazy to stake. Or maybe they want to do it just to try to time cycle tops, as much as that may be a misnomer. So I'd like to hear a little bit about how you got into it, Richard Hart, Hex and everything, but also just that dichotomy with you of like the interest in time locking, even though you are known anyway as a TA guy.
Yeah, so you definitely set me up. You gave me you put the ball on the tee. That's perfect, because the reason why I got into crypto initially, for those that don't know, is I was mining. So to understand how to build a business from the ground up and have to figure out a way to pay the mortgage, get the facility built out, get the equipment, make sure the debt's getting paid off at a certain rate, make sure energy bills are paid, and then trying to predict the damn Bitcoin market all at the same time was complicated, but interesting. And it was an endeavor that I was willing to take on, because I thought there was nothing more important than free sovereign individuals being able to print money legally, and to try to bring back power away from this fiat like monopoly that the government holds over our head, and not that fiat hasn't brought prosperity to the world, because it has, but it's also brought the other side of the coin too. And so I think it's just good for a society to have a free and fair market, or fair as it could be. A free market and a controlled market side by side gives you optionality, and I think that's the world we're heading toward, is optionality. And so the option I chose was to sell off all the headache and the overhead in the mining business, and get into something else that paid me and allowed me to print money legally, without having all the issues that goes with mining, right? And so obviously Hex isn't just like a tame little animal. It kind of is quite volatile in and of itself. So it lends itself well to TA, because if you play the TA game with Hex and its offshoot coins, you can compound and optimize your returns. But that's not to say that staking doesn't have its place, because what the staking does is it guarantees you, literally up to hundreds of % APY over time as that share rate continues to evolve, right? And so I think what it told me was like, this is the hedge in the event that trading doesn't work out, because there's always risk you take on by taking trades. And to have that core thing always printing for you gives you an opportunity to adopt the other mindset, which is dollar cost averaging in every single day, right? Staking Hex is the equivalent of DCing in every day. So if you have a bad trade, well, you're still hedged that other way, where like, so long as Hex holds these price levels and goes higher into the future, you're going to end up winning hard, and you're going to outperform the debasement of your fiat currency, the lousy returns in the stock market indices, gold, any of that stuff, just with a regular Hex stake, because it's so new and you're printing so much interest. So it just makes sense to me, and I hope it does to you guys too. And I think that's what we're all here and excited for.
Yeah, for sure. Ewok, I'm sure you have some thoughts on the staking mechanism, because I'd like to hear actually, Ewok, what you have to say as an OG Hexagon, just based on what I said a minute ago. And I'm not, by no means, I will mention these guys. I am not at all calling them out. So I don't care. Anybody can invest however they want to. I'm not telling anybody what to do. And I love these guys stream when they do. But Corey Geary and Money Talks with Dane, they're an example of somebody who they're not as keen on staking Hex. Again, totally understand, make your own choices. That's fine. And I love both those guys. But Ewok, I'm interested to hear your thoughts a little bit too, as we heard Axis is on that maybe like kind of the waning of people wanting to stake, maybe that weren't into Hex as much in the beginning and have seen the pain of this bear market and are worried about doing that through multiple markets,
Well, I think the biggest thing with the bear market, if you set yourself up properly, you can always have something coming out. And if it's not a good time, then you're absolutely free to restake it. For me, I think it was the staking ladder that kept me going. I have them coming out. I'll tell you what I have. I have them monthly for 15 years. So every month I create another one for 15 years later. Even if I'm not around, my kids will get them. So, that's the idea. I'm trying to set up them for, financial a future that they can enjoy too. I talk to my kids about it, and I want them to keep it going. Last thing I want them to do is emergency end stake everything and sell it all. So, as long as this thing keeps going, like I think it will, it's set up to, Richard even said it's set up to have meat on the bone for the later guys as well. And I think it will continue that way. And I think a lot of these cycles are going to have people finding their way into Hex once they realize what it is and it's the store of value. I think more and more people will find their way over. Like Axis said earlier, there's a lot of new people, a lot of new coins, and a lot of different little niche type things that are being created right now. Once the green candles go, I think you're going to see where people put it. And honestly, like I said, I think they'll find their way over to Hex for the staking ladders. And and I like I said, the biggest thing is knowing that you're earning it every day. It's constantly earning a constant DCA without really doing anything. So that's the most important thing to me.
Yeah, and it is definitely a bit of a solace, I think, when prices are tanked like they are right now. Like when you just check your Hex balance and you do see those T-shares working for you, even if ideally we always want to have dry powder on the side, but we don't always, especially when like you're targeted by the SEC and all this shit hits the fan and stuff like that. So it's nice to see those piling up in the meantime. I want to shift gears a little bit to this. So, and I want to get your thoughts on this, Axis. So last week, the big talk within this ecosystem has obviously been, since the SEC thing filed on July the 31st, Richard Hart, should he fight? Should he settle? I have always kind of felt like the conversation is more nuanced than that, regardless of the simpleton thumbnails that I make for the channel that say fight or settle. I do think that it is more complicated because there's lots of nuance to it. We have, with Korth, there's all kinds of delays and stuff like that and just ridiculous things that are going to go on. But he had that really interesting tweet last week. He's been doing this, or his AI system, or whatever it is, helping out crypto lawyers. And he cited, I'm looking at the tweet again now. I mean, upwards of like 30 different case laws, that some of which are had actually gone to the Supreme Court. Really interesting stuff that anybody should look into for sure. It was a great tweet. And I guess I'm just curious, reading the tea leaves, what do you think? I mean, is this an indication that like because he's never acknowledged this lawsuit? I heard somebody say that the other day, that he acknowledged it. So that, go ahead.
Yeah, dude. Like somebody made a comment, I sent this off to Ewok before the stream. It's from this wallet, or sorry, this Twitter profile, Atropa Witch, and they said that they'd been let's see, I spent 8 years in litigation, no settlement to get out. It's designed to bankrupt you, so it's basically legal extortion. Well, we know that, right? That the SEC is going after things for easy money, but they also said that. Well, we don't think that we've actually seen him get served in person. I don't think that's actually happened, and he resides outside of the state. So, I mean, there's a potential here that he hasn't even been served. First of all, so that delays the whole process. And like you said, he hasn't not acknowledged the lawsuit. So, that's it's interesting, right? Because I think a lot of people believe that we need some sort of resolution for the price to move up, but I just don't see it that way. I think a lot of people think that to get centimillionaires or billionaire types to be interested in the asset, like we need clarification on that stuff, just because it's bad optics otherwise. And that very well could be true, that it slows down the PulseChain ecosystem this cycle until a lot of this is resolved, 3, 4, 5 years from now. That wouldn't mean that we wouldn't get potentially like a 10x move on a lot of this stuff. Like there's still plenty of opportunity in here for returns, even if it is like a muted cycle, regardless of what happens with RH. Remember, this is a suit against RH and not so much against, immutable code.
Right.
And so, you know,
His
a lot of
alter
time,
egos. Yeah.
yeah. So like EOS has been in through this before, and they've paid to settle, and they got to operate as normal, right? And that never helped the price. You know, XRP won some stuff, and the price pumped a few, you know, a couple 100%, and then now we're back below, you know, pre-SEC resolution levels. So it's, I don't think that plays as big of a role. I think a lot of people get like wound up around that. But it, you know, I also had another thought while we were talking. Sorry to kind of roll it back to what we were talking about before, but I wanted to like make mention of with the T-share system and how the whole market, the whole hex market is really short thinking right now. Either not staking, don't believe in staking, won't stake, or it's staked for less than a year on a net weighted average. And this is like data that Chris Freeman from hexfire.io has actually put together to basically prove the point, and that's that the whole market is offside right now. Nobody's staking long, and this is what happens in the bond market when yields are inverted and where everybody gets real short and they start buying 6-month yield bonds, or they buy 6-month bonds or 1-year bonds or 2-year bonds, and the macro market is the same right now where those longer 30 and 10-year bonds, they're cheaper and they're not paying the same yield as, or they're not paying a higher yield than these shorter term bonds. So what my thinking is just like the bond market will need to revert at some point in the future and price shorter term bonds lower or higher with lower yields, and vice versa for longer term, the hex market will have to correct because so many people are off sides that remember that the only people who can sell are the ones with the coins. And if you're not minting new coins, then where are you getting the coins from to sell without pushing the price up first to get them?
Right.
And it's like a one-way equation where at some point there's an inflection point and a lot of the market gets left behind, and they're staking at a much higher dollar price and a much higher T-share rate. And we have a big T-share increase coming soon that's going to push it above 30,000 hex per T-share. And within a year or two, we could be seeing 40, 50,000 hex per T-share. And if you know, if you 10x the price of the underlying asset, the hex, you know, by the way, it doesn't take a lot of money to do that. $20 million can do that on the ETH side right now. So it's like, it's setting up for the market to get offsides, or it is offsides in my mind. And everyone's thinking very short because we're got PTSD from the last 2 years of down and the dilution. And everyone thinks that this is just a normal bear market. It's not. It's a triple bear market, man. You had the bear market, and then you had the failure to launch of PulseChain last May. So it's bear market number 2. And now you had the SEC scare, bear market number 3. And meanwhile, in there, you have scattered in all this dilution into all these other coins and opportunities. When all this starts to consolidate back into what counts, Hex is going to be the thing that's on top.
Yeah, I agree. I think the T-shares, I think it's a self-balancing system. You know, we talk about this a lot. I think, you know, everyone says, well, if no one's staking, well, then that yield gets crazy, right? If it's only like 1%, what is it? And it's like 369% inflation.
It's insane.
To offset it. So there are so many little checks and balances in there to self-balance the whole thing that it's really hard to get too far offsides, like you said, you know, or the people that are staking are the ones making out like bandits, and other people see that.
Those are the long-term believers too, right? Like us.
Yeah.
You know, and like that's good because those are the guys that's really going to carry this thing to the finish line. It's not going to be the tourists that's coming in when we're halfway up through the bull market.
Exactly.
So yeah, look, you know, when they grand scheme of this, look at the SEC thing is a pretty picture. It's fun to look at. It's a total distraction from what's important. Period.
Yep.
I think you are right on that, because we still, at the end of the day, are looking at timing and cycles and things like that. And you mentioned it with XRP, like the little difference you really are seeing in prices. I mean, XRP, since the beginning, has always been a hybrid crypto, you know, and if there's anything in crypto that could have been acknowledged as a security, it would have been XRP. So, I mean, like the level of pump you're going to get, or you mentioned EOS as well, you know, what Richard Hart has created in Hex now with a blockchain like PulseChain, with PulseX, despite its horrible performance out of the gate, these products are just better products. And at the end of the day, regardless of what is happening, I think we're going to see that reflected in the price. So, Yeah, the SEC thing, it's going to be there and stuff. But again, how much of this also acts as just purely like when Bitcoin's over 40K, people are going to buy. Doesn't matter,
I'm with you on that. And also in addition to your comments on PulseX, someone just made me realize that 2% of the user supply, or was it 3% of the user supply, has been burned.
2%.
2%
Yep.
has been burned in the first, what is this now, fourth or fifth month since launch, May, June, July, August, September. So the fourth month. In 4 months, we've burned 2% of user supply. So if you just extrapolate that out over like maybe 5 years, well, what is that? Like if you're looking at burning 20 to 25% of the supply of something, potentially over the next 5 years, what's that going to do to this to the supply and demand equation, right? And so I think inevitably, when you're going to see a tremendous, like we're there now where PulseX ratio to PLS is 4-to-1.
Yeah.
We're back at those base levels when the thing launched, and we saw it go to 2-to-1. So there's an opportunity here, and same for Inc. Huge opportunity on Inc. right now. And when the market's ready, it's going to absorb all of that supply, and just remember, from 80-cent Inc. to $80, that's 100x, right? So I mean, like, that one's a little different because its inflation model is a little different. It's just a linear line up to the right, 31 million per year. But the amount of inflation coming out year over year is going to be less than the year before, right? So if 31 million this year, you're going to get a doubling of supply the following year, and then you're only going to get a third of that total supply the following year after that, and on until like most of the supply will congregate in fewer hands, and it'll just be diamond handed. And it'll be the masses, the Metcalfe's law taking effect, the masses fighting over 20% of the supply, just like it always has been in fiat currencies and beyond. And then the PulseX thing has a whole other element with the buy and burn, where it's just going to be eviscerated. The user supplies, like, it's flatlined, and then now it's getting burned away. So like it could overperform Hex price in a decade because of the tokenomics of it. So when Hex and Pulse, or Hex particularly, stops paying short-term guys enough, they'll be looking to PulseX for the gains. But the guys that staked early on Hex, their interest is going to be so high in a decade from a 10-year stake that they're going to be earning all the inflation that the PulseX guys are seeing in price appreciation, but they're going to be getting it on the inflation side of the equation. So it's two different
Twisted. Pretty twisted. Yeah.
It's wild.
Well, it also shows you how long this game can actually be. And I think you really are illustrating like how short-sighted. I mean, even myself, I think we're all, susceptible to those biases kind of like, just being on Twitter and seeing how different people are talking. People are really short-sighted right now. And it's not hard to get there. Like you said, I mean, it's been 2 terrible years. And I like what you said about 3 bear markets for this ecosystem anyway. I mean, it really does feel like that. And I think maybe looking at it through that prism might be able to help people get out of this funk that we're in right now, which we seem to be getting towards the end of, because this has just been, what worse can happen really at this point, as far as narrative type stuff. I want to ask you this. So you went ahead with the E-Hex thing, and I really wanted to ask you this. So you made a comment in one of our streams when you were just here as a visitor a couple of weeks ago that E-Hex was a god tier trade, in your words, at the prices that we're at the moment. If you could expand on that, if there's anything to add to what you already kind of added about, just the power of the T-share and what's going on there right now. And also, I long for these days. I don't know about you two, but I long for the days of June of this year when all people within this ecosystem fought about was the parity issue between Hex on PulseChain and Hex on Ethereum. Those were fun days. We saw Furu's face everywhere all the time. Now we've got Gary Gensler everywhere. It's a whole other ordeal. It's not as fun. But I wanted your thoughts on the parity issue, short and long term, because we are seeing every time we get a big dip in this ecosystem, and I'm just checking it right now. Yeah, so we're back to a little bit over 2-to-1 for P-Hex to E-Hex. But when we have seen some of these dips, we've seen it kind of band together and get down to about 75% difference or so. But yeah, tell me a little bit about why you would be so interested in E-Hex when most people are against it right now. I may have just answered my own question, and kind of your thoughts on the parity short and long term.
lot of thoughts about it. The first thing that comes to mind is that this isn't the first time that you can go back and find data of coins that have been fudded by regulators, or a coin that's forked, for example, Bitcoin Cash or the Ethereum DAO fork from the original ETH Classic into ETH 1.0, I guess you could say. Both of those are historical data sets, examples that you can go back and look into and see how amazingly well the forked coin performed or the not forked coin performed. And in both cases, in multiple cycles, you will see that although one coin typically overperforms for an extended period of time, the other one does make a comeback later on. And had you accumulated the cheaper one for longer, you would have not only had way more supply, but you would have realized similar, if not better, gains. But you just had a shorter window to capitalize on that. And the reason is because everybody that has eHEX has pHEX. It's the same common pool of users that got the same coins. So they're essentially the same coin right now in terms of the user market, the users who hold them. And it's going to take time for them to diverge away. So yeah, they might be at a certain ratio right now, 2 to 1, let's say. But there could be a time, again, like we've seen recently, where they do come closer to 1 to 1, but they'll never have to go. We don't have to live in this imaginary world where they'll be 1 to 1, because during some point in the cycle, the one will approach the other one, and there will be an opportunity to ratio trade. And it doesn't just happen with the hexes; it's happening with Pulse and PulseX too, where it's fluctuated between 4 to 1 to 2 to 1 back to 4 to 1. And if you just took that ratio trade, like, who cares about parity? That's not the debate. The debate is they're both going to have value. They both have the same users in both pools. And if there's ever an event where the Ethereum guys get their shit together and they fix this gas fee problem, you hear these rumors of next year that they're going to reduce gas fees by 8x, which means if you're paying $1,000 for like a 2-year stake, let's say, at the peak of the bull run, it's now going to only cost you $125. And I'm going to take the bet, and this is where I'm speculating, that the $125 will be well worth you staking it for 2 to 3 years.
I agree. I that's one of the things that I've always thought too. That people say how wrecked the fees are. I'm hoping that they'll fix them. So that's kind of where I stand.
Buy the rumor, sell the news too, right? So it's like, if there's any wind of that coming and then it happens, you don't think the eHEX price is just going to rocket?
Yep.
Yeah, that's a big thing that people are just pretty much assuming that will never happen. I mean, if you look at how the market's kind of reacted and how people are looking at it, they're just assuming ETH is never going to get their shit together. I mean, is it objectively better to trade and stuff on PulseChain right now? Absolutely. I mean, even then it would be, frankly. Obviously, that's even 125 is kind of a ridiculous price, but that doesn't render Hex on Ethereum useless or anything like that.
No, it doesn't. And we've seen more useless shit coins with no utility do huge returns anyways, right? So it's like, people are going to buy the rumor, sell the news on that. It's not even a factor, right? Whether or not it's 125 to end a stake or $1,000, it's the fact that they're doing an upgrade and there's a trade there. Just like with testnet v3 this year, where we saw Hex run from 1.7 cents up to 13 cents. That was buy the rumor, sell the news. It caught a lot of us off guard, but that's what it was, and here we are.
Yeah, that was a prime example of it, I would say, for sure. If you guys are here enjoying the stream with Axis, smash the like. We very much appreciate it. We still got a lot of stuff to get into, and I want to transition kind of to, so you were just mentioning PulseX, some of the mechanics of PulseX, obviously the buy and burn, how we've already had 2% of the user base burn, and where we could be with that in just a few years. You had, and some of my notes are from like a week ago, so I'm trying to remember where this is from, but you had a comment, I think you might have been on with Corey Costa or tweeted at him, or I forget what it was, but about PulseX being down, just kind of being a math equation, which I think was kind of a good cold-blooded way of looking at it. People, we got PulseX down like 90%. We, like you mentioned, we've got that ratio at 4 to 1 basically right now between Pulse and PulseX, but everybody's talking about the terrible performance of PulseX so far. And let's face it, I mean, like, the whole ecosystem. I mean, you could say that about looking at the charts, but I think with PulseX particularly, it has been one of the worst performers. And so many people chose to really pump it up prior to the Pulse Chain launch because, let's face it, more people had PulseX. There was more money in PulseX.
Bro,
So,
I love this. This is juicy.
Yeah, I want to hear your thoughts on this because, I mean, is it just as simple as that's how many more people had the token? That's how many more people had, that's how much more money was in it. That's why we're seeing it reflected in the price. So I want to hear your thoughts on that.
Yep. More people held it by a factor of, I think, 3 more. So for every 1 Pulse holder, there was 3 PulseX holders. And like, where's the utility short term? You don't have to own PulseX to be benefiting from the buy and burn. You don't have to, you don't need it for single-sided staking. You know, PulseHex and PulseChain were overperforming. Like, it's just and the reason why was because everyone had the one thing and everyone needed the other things or wanted to chase gains somewhere else. And so it just got treated like the redheaded stepchild now. There's just too much supply and too many people were banking on, they missed the PulseChain sacrifice and they're holding this PulseX, right? And they think, oh, this thing's gonna, you know, everyone created a narrative before the thing launched, like looking for these insane returns, but that was the least desired asset out of everything. Even ink was more desired, I think, because it was really scarce right away, right?
Yeah.
And so I think looking at it now, it's like, okay, well, now all that, like, if you sacrifice for PulseX or Pulse, pick either one, and you got that 2.5x multiplier bonus, and if you were selling it at the top, didn't matter which one, taking profits, I mean, you were realizing gains in hex terms of like $1 to $1.50, and in some cases even $2 per hex, in terms of if you sacrifice at the peaks, so that would be 17.2 cent hex during the Pulse Chain sacrifice, multiplied by 2.5x, it's like over 40 cents, right? Wow. And then the price appreciates 475% off the sacrifice rate that you got, and then you do the math, like you're looking at $1.60 hex that you sold virtually by selling the Pulse you got from the sacrifice. Same thing for PulseX. Had you sacrificed at 34, 35, 36 cents and had a similar equation, you were looking at realizing over $1 per hex. And so like people made a shitload of money on that sacrifice phase, on the launch phase, after that run up, after that 150 million was coming in over the bridge. And then that listing on OKX, which was like the nail in the coffin, right? Because every time a centralized exchange lists, you know that they want everyone to deposit their funds on their exchange so they can get exposure by letting the price drop 90% and then buying it all up off everybody. But it was just kind of a turn of events that they delisted it. You know, was that intentional or not? I don't know. Will they relist it? But perhaps, I don't know. It's just interesting that, you know, that stuff all happened after the fact, but the writing was on the wall when the bridge uncleared and we peaked, right? So there was a lot of people in both camps, Pulse and PulseX, that made a lot of money. And that's not even including the ink that people were farming. You know, people were making, like big sackers were making like over $20,000 a day in ink rewards at some point in there, maybe even more. So it's, and you look at the bridge and you look at, this is kind of like veering now off of just PulseX and just looking at the ecosystem as a whole. When you look at the bridge, there's been like 680, or I'm pulling this off the top of my head, it's over $600 million put into the bridge and like 450 million pulled off the bridge. You ended up with like something like $150 million is still bridged in. And that's pretty stable now for a while, but crazy to think about the change of hands and like how much money was actually traded.
Yeah,
well,
and
real quick,
I
have a question about your thoughts on this. You know, we've held the 3-to-1 ratio pretty well with Pulse versus PulseX. What do you think the ratio of people being 3-to-1? Do you totally correlate that to it completely?
Yep. I think so. I think it's just simple math. I think in addition to that, so the reason why you will think of what's the middle number in 2 and 4, it's 3. Well, if 3 is a straight line across your screen, it's just oscillating up and down in a ratio as they both rise together. Well, right now they're falling together, but
Yeah.
as they rise and fall together, they're going to oscillate around that 3-to-1 ratio until the redistribution phase is done, and everyone who wants what they want is settled, and a lot of the PulseX and Ink is going to get consolidated into a few wallets that is going to be like the masterminds behind the next few cycles.
Okay. Yeah, I thought so too, and I wondered how that would change over time as a lot of these big wallets, as you see, have dumped. I wondered if that ratio would change as things even out, or is it going to stay, do you think, pretty static along the way?
Well, so when it'll change because, like I was saying before, if you look at it on a 10-year timeline, eventually so much PulseX gets burned at a faster rate than anything else that it causes a supply squeeze. And it'll just start creating green candles, and then it could go into a parabolic move all on its own. So it would change the ratio. But you're looking at 5 to 10 year
Right,
time
long
frame.
term.
Short term, I would say we're not going to go out of these ranges. I don't think any you go lower than 4-to-1, and I mean a lot of people are going to take advantage of that opportunity and just look for a flip from 5-to-1 back to 4-to-1. Because it's just an easy 20%. So
Sure.
When you're dealing with like big players like sharks and whales, like they want those 20% moves if it's a shoe in like that, and they can have some sort of say in where the market is driven.
That kind of leads me to the question of, so let's just pick your average investor in this ecosystem right now, which I'm making some assumptions here, but let's just assume for easiness sake of this question, if they are equally invested in PulseChain, PulseX, and Hex on both chains. So we'll just say that 33% in each, and then their hexes are just split right down the middle. If that is you just kind of seeing the state of things right now, and I get really intrigued by this PulseX angle of things, because it's, again, that redheaded stepchild, like you said, that everybody loves to hate right now. Mm-hmm. How would you be like looking to, not financial advice, just your choice, how would you be interested at that point in investing into the ecosystem? I mean, would you just be plopping down, a third into everything, or would you be heavily leaning towards PulseX, like you kind of alluded to, I think, with this 4-to-1 ratio now? How would you look at a DCA?
I don't think many people is going to like my answer because it's selfish. But like, if let's say I had $1 million to DCA today, like how would I do it? I'd pretty much just be focusing on P-Hex and Pulse because they're for sure bets. And I know that million can turn into 10 million. But because that's the safe trade, you can go ahead and put 50 grand or 100 grand into Ink and PulseX and split it up 50-50. And if they overperform, then it really helps the portfolio. So like you take a small weighted percentage and you put them into those if you want to take on risk. Now, if you were to like take the million and split it up evenly across everything, to me, it doesn't make as much sense because you want to take the best horse, the blue chip. And the blue chip, in my mind, which is P-Hex, and then in second place is Pulse. But I feel like those two are going to have an interesting relationship this cycle where they'll take turns overperforming each other potentially. And so inside of there, I think there's going to be moments where if those two are trending up together, PulseX and Ink, they're in the cycle at some point. This is the opportunity cost of not knowing when it's going to happen, but that you could see these huge fucking candles print on PulseX, which is just like, what just happened?
Yeah.
Because you could see this consolidation that happens over 18 months, and then in like 1 week, you're up like 1,000% or 2,000%. And like everyone that missed the boat and was playing safe got wrecked. Like they missed out. And that's how you leave people behind in these markets, right? And so just the more it's unfavorable, the better opportunity it is, because they're all going to be around. And if on the longer time frame, I think we've laid out enough now that Ink and PulseX have a place on a longer time frame.
Yeah, that makes a lot of sense. And I think also with PulseX, just that buy and burn mechanism, it does make sense that as volume picks up and we get deeper into the cycle, that you could see that from it and just see some aggressive upside, I think. You just talked about like the actual Pulse token and P-Hex being like the stalwarts basically of this. And I'd like to get your thoughts on what have you kind of seen or what's been your observation with the PulseChain launch. We are now, 4 months pretty much exactly since the launch. It was May the 12th. But the launch of PulseChain, basically with the chart, compared to other L1s from the past, Solana, Cardano, even ETH, how does Pulse stack up 4 months in? And obviously you're not worried, it doesn't sound like, but should people be concerned, be worried at all? Not necessarily because of the SEC news, but obviously we're at max FUD. We've had some crazy tweets lately. We had Naga Bo saying that he sold all of his P-Hex for pDAI, which we're going to get into here in a moment, everybody. If you're waiting for the P-Dai and Atropa conversation, we're definitely going to get there in a moment. And Ewok, I got news for you. We got flamed big time on a video about that the other day, so we'll talk about that. And then we had, and I almost don't even want to acknowledge this person, but this Brandon B guy that it seems like he's doing kind of a Furu BitBoy type of attitude change to get attention or something. But he had this tweet the other day, really good bottom signal if it is one. But he says, given Richard Hart abandoning his projects and the SEC uncertainty, basically saying he's going to start buying, I guess that's the crypto.com token, Crow, Phantom, and Solana, among others, moving forward. And he's just going to hold his Pulse bags and everything. And then he really shits on Richard Hart a lot personally. So, not that he is anybody. I'm just saying that we are seeing stuff like that now. So I'm interested to get your thoughts on how PulseChain compares to those other L1s and if we might be seeing like prime capitulation here right now.
So in terms of like the technicals, like PulseChain is really underperforming, I think, a lot of the other L1s, but it's launched in a unique situation, right? Where we've talked now at length about how diluted everything got across all in your user account is the same. So the same, let's say, I forget, 40,000 people SAC for Pulse, 120 or 140,000 SAC for PulseX. You had like 120,000 hex stakers. Let's just say there's like 150 to 200,000 users on Pulse, and that's being generous. That's not changed. And like we need new users to drive this thing. We're not there yet. But the other guys got users because it was different. It wasn't like a public, like free public launch like this was. Those had initial and like private investment deals that were done behind closed doors, and they were promoted on a lot of the large platforms, and they were easy to convert. There's a fiat into them right away in the middle of a bull market, and with this there's like this learning curve, and we're actually trying to push a new way to do finance with DeFi. So there's way more there and people won't get interested or want to put in the effort to learn to do the work until the green candles start to print. So somebody's got to set the bottom. Somebody's got to put the money down on the line. And when that happens, you'll start to see all of those other things, dominoes, start to fall. So don't compare this to those, because PulseChain is unlike any other L1 launch like we've ever seen before.
So what do you make of the whole, I've heard this a couple times, everyone's afraid to be that person, to put that money down because they're afraid they're going to be exit liquidity. Yeah. How do we get around that? It's a rough spot to be. I guess it's just having the balls big enough to do it, right?
Yeah, I mean, like, I'm not the guy to do it. I don't have big enough bags to sit out here and put in $150 million on my own, right? Nobody really does. And yeah, there's a lot of exit liquidity, but like the longer this goes on at these prices, the more people have to sell to get the same amount of dollars extracted. And so like the longer it goes on, the better it is for the long-term health of the chart.
Right.
And a lot of the stuff's going to change, and people are going to have different feelings and sentiment, and people are going to put the money on the line when other things start to happen with the macro environment that we talked about earlier, and when money starts flowing back into crypto.
Yeah.
They're not going to stop at that. There's tons of ETH whales that are like looking at these ERC20 prices, probably like licking their chops, just waiting for someone to take the first punch, right? And then it starts with Bitcoin, then it more quickly now is happening than going into Ethereum, and then from Ethereum into all the other L1s. And, you know, ironically enough, PulseChain has kind of been in a league of its own and kind of led the charge in terms of like DeFi transaction volumes and interest and the amount of use and like how much ETH fees have gone down ever since PulseChain forked. Like it shows how much activity hexagons create on the Ethereum blockchain. You know, and I think a perfect thing that goes along analog to that is like, look at what happened with the Zen launches. Like Zen is a subset of the Hex community. That's how Jack got any notoriety. It's by starting there at ground zero with the Hex money, and then and look at what those contracts have done to fees over the course of its existence on all the chains. So it kind of proves like, you know, for if it doesn't matter the percentage of hexagons that's involved with Zen, the point is that hexagons are using the chains, and now we can spread our use across two chains to, you know, mitigate the downsides on either, right? And so I don't know. I just think it's a good setup, and we're just going to take more time.
I think you make a great point, and it kind of shows maybe the pointlessness of my original question about the L1 comparisons and how we're seeing people compare them on Twitter a whole bunch. You know, we've been seeing it. It makes sense to do. I understand why people would do it. But you're right. I mean, like these other ones, you know, there's VC capital, seed rounds, ICOs, and stuff like that. PulseChain is anything but any of that stuff. So I think that is something we all should probably keep in mind, because it is everybody's favorite pastime to kind of compare it to the initial ETH chart. So I do think that's a great point.
Hey, I'm guilty as charged. I've done it. I've compared Hex and Pulse to a lot of different blue chip cryptos, and man, they're in a league of their own, you know, because it is, you know, the most bullish thing about all this is like the big funds don't have any. It's all regular, you know, dum-dums like us that has all the supply. And it's like, if they want to come get it from us, they're going to have to convince us to sell it to them, right? At any price. So it's like, sure, you're going to get the guys that are willing to sell Hex at a penny and 5 cents and 10 cents. But when that supply has been eaten up, you know, and there's a fund that has 2 billion out of the 2 billion Hex out of the 16 billion liquid user supply, you know, that's a large percent. Like, where are they going to turn for the next? Like, there's a 0.5% to 1% of all Hex total supply is available on market in the market supply. So even though there's 16 billion Hex liquid user supply, only less than 1% is available in the market, which that tells you that it's valued and it is used for more than just, you know, trading games. And I think all that's going to come up it's going to catch up with everyone eventually. And like, there is going to become a huge shortage of the things that count, and the things that count are the things that are the most usable. And it's fun using PulseChain. I'm going to tell you, not thinking about gas prices is fun. I have interacted with the blockchain a lot lately, which I didn't get to do on ETH a lot.
Yeah, and we're going to get to that exactly here in a moment. So let's get to one of the main events that I know a lot of people are waiting for. Let's talk P-Dai and Atropa a little bit here. So, yeah, we got flamed Ewok. I saw some comments on a video that we had uploaded today that was from last week. One thing I did take offense to, I don't remember the name of the commenter, but they said, look at these two old guys on here. Axis, I'm going to challenge you right now. I just want you to look at me. We've never really met before. Just guess my age. That's all I'm asking you to do. I'm not a woman. I'm not going to get offended. Just tell me how old you think I am.
37.
I'm not going to answer, but that's a good guess. Okay, you're closer than the person that was in the comments. But I don't mean to. I'm not. You know, Ewok, you do have a little bit of salt and pepper in the beard, so I'm not insulting you or anything like that. It just kind of rubbed me the wrong way a little bit. But this person, and this brings me to a greater point, though. But this person was saying, you know, these old guys should be in the stock market and yada yada. And it's like there's these, you know, these stupid factions that are forming on either side. Like, you're a Pulse maxi, you're a Hex maxi, and then these like people that, you know, pDAI is the only way all of a sudden. And if you do anything like, I think most people in the world would look at my portfolio or yours, Ewok, and say that we are wildly aggressive and very stupid in their opinion. You know what I mean? There's a lot of people that would think that as well. So, but let's actually talk about this real thing. So, Axis, what do you think? What is your understanding of Atropa? What is your understanding about how pDAI has been funded so far? And I just want to say myself to that viewer that was on our channel and anybody that's seen our past stuff, I did go ahead and dip myself into pDAI over this weekend. I'm in profit on everything right now because it's in an all-time high again. But I'm interested to get your thoughts on this whole thing, Axis, used to say Ewok. Give me your thoughts on the Atropa, how it relates to pDAI, what forces are at play here, and is there an incentive to actually get this thing to $1 or peg it to $1? I think I saw you on a stream the other day. Oh, you were on with The Verse, I think is his name, last week. That was a great stream, by the way. And I think, spoiler alert, you said you did not think it would ultimately get to $1. But anyway, I threw a lot at you. Just give me your thoughts on the overall idea.
My overall thoughts on Atropa and pDAI is that it does not move the same as other things on PulseChain. So like there's something going on under the hood, that I haven't fully unwrapped to the deepest, reaches of what's going on there. But my understanding is that there's some sort of like burning of the LP tokens on those pairs that's creating some sort of arbitrage opportunity for bots that's basically propping up the price. And then there's other pairs that's being tied to these things that's giving higher TVLs and an ability to basically prop the price chart up in one way or the other. So it's a way to mitigate sell pressure and help the price chart stabilize. And then when you look into like pDAI and USD and PUSDC, they've somehow, this last I looked, they're finding like some sort of a parity. So there is a stability there on those two coins, which are just forked stable coins, right? So that was an interesting development in all of itself. But to me, it seems like there's something bigger at play here, and people are trying to create enhanced liquidity opportunities and create value on the chain. And so to me, it's like that was like my big takeaway was that people are creating value out of nothing effectively by taking short-term sacrifice for long-term gain. For the guys that's funding it, right? Because that core, there is money that's being put in and lost short term, to eat a lot of these potential downside moves up and to stick with it and support that ecosystem. So I think at the end of the day that this thing is not like anything else on PulseChain. There's a bigger plan at play, and whether or not that thing gets to $1 and pegs or not is irrelevant to the fact that it's already done something incredible, and it's brought eyes and attention to PulseChain that we otherwise wouldn't have had, and we needed this now more than ever at these prices. So I'm totally blown away by that now, and now your pDAI chart is near all-time highs, and I'm starting to get flashbacks to the Hedron chart on Ethereum when we were near the all-time highs and we never made it. So I'm hoping this isn't one of those cases, but it's definitely interesting, and I want to say that I think it's going to a penny. I think it's going to break out and go to a penny, but beyond that, I don't know if it's got legs to go all the way. But look at how amazing it's done so far, and man, if you look into the supply dynamics, you'll get more information. If it's held by diamond handlers, anything's possible. So I'm for it.
What do you think that would mean? Like, so let's just say the ultimate scenario does pan out. Let's say it does actually get to $1 and some, influx, something keeps it there. Some influx of cash from this Atropa entity or whatever does keep it there. I mean, how it already is a good narrative. Like you've said, it's really helped PulseChain so far. And I think we should be celebrating that, kind of like what you said. But do you think that, what would it really say if there was this algorithmic stable coin that on PulseChain was kind of organically brought up? And I do say kind of organically. I'm not going to pretend it was just everybody.
Yeah, first of its kind, right? It would be amazing. It's an amazing success story, and so many people would be interested in just how that was possible. I mean, obviously we know by looking at the code on Maker and like reverse engineering it and seeing kind of like how that's possible to create an algorithmic stable coin by backing it with Ethereum and other things as collateral. That's a possibility. And maybe they get it there and then they use real bridged in stable coins like USDC and stuff to keep it there. I don't know. Like there's an element there that maybe there's something we don't know. But it's possible. We've already seen it before on another chain, but just not ever gone from zero and brought it up. This is like a whole other level of awesome. So I think it's going to bring in a whole new wave of adoption is what it's going to do. And it's probably going to happen from very quickly from potentially like the penny level up. Like it could just one final pull, like you get to a penny really quick and then you pull back down one more time and then just we're going to $1 and then that, but it's not us just alone. It's this wave of adoption coming in. Hopefully that these guys behind it have ETH whale friends that can help it happen even quicker.
I don't think that would be too far out of the question, honestly, with what we've been seeing so far. That kind of leads me to this, though. What do you think about some of the other PRC20 tokens? You know, we saw a little bit of that narrative perk up there, maybe like a month or two after launch. And maybe some people from Link come in and Aave, and some of them pump a little bit. What do you think about that long term? You know, there hasn't really been adoption yet, but what if all of a sudden one day in this bull market, when the market actually comes back and people actually realize they have these copies on PulseChain, what do you think about that? I mean, like to me, that's a casino that is still untapped, and we're seeing something amazing with P-Dai right now. What do you think we could see when retail comes back and maybe notices that they have these copies on this chain?
Immediately they're going to want to get their money off, right? And I think that's what we've seen already is like whenever you do get some price pumps, like guys come across the chain, grab their money and they run. And that may happen for a couple waves. But I think what's more even interesting is the thought of are these guys going to get sick of using Ethereum and want to go take their software somewhere else? Or is there going to be some sort of like cross-chain interoperability with these contracts that's developed, like a V2 upgrade, where like some of the load can be offloaded to PulseChain, but then there's some oracle that tells Ethereum what to do? Because if Ethereum's where the liquidity is and they don't want to completely leave it, but in the interim they want to run some of their functions off-chain on another layer one chain, but have some sort of similar to what Alex is building with the Hedron V2 protocol, where it's going to allow you to use Hedron and Icosa from either chain for the same purpose. I think that might be the route that could bring those guys into more of the PulseChain ecosystem potentially. It's just a lot of cross-chain contracts. Basically because if ETH guys really want to see price of performance over there, they're going to need to bring in guys that can afford to play the game. And if they want to afford to play the game, they're going to have to go to the cheaper chain.
Yeah.
Otherwise, it's just a bunch of whales swimming together fighting for, okay, what are we going to do? Watch our ETH go from 2K to 10K, 5X? That's not enough for crypto guys. Like, they're going to have to do something else.
Yeah, I think that's a good point. Ewok, I want to finish with you on the P-Dai thing. Have you heard anything here tonight from Axis, or where are you in your evolution as far as Atropa and P-Dai? Do you have any updated worldviews? Have you watched any content on it? I'm just curious as to kind of your position on it.
Well, not really. He did touch on, one of the things where there is something going on, and I still call it the Wizard of Oz. There's somebody behind the curtain pulling the strings so far. And we still know that DAI requires an oracle to keep it pegged, which we don't have. We don't have an oracle on PulseChain yet. That, not saying it couldn't be built, but that's one of the other elements that it really needs to stay pegged. You almost have to have that oracle in place to do it. So, yeah, my opinion hasn't changed. As far as I'm concerned, it's still a meme coin with special attributes and other people working very hard to make it do some good things. Nothing wrong with it. And the growth, like I said, the people that are coming in, we still need that. PulseX is seeing volume because of it. We're still burning tokens. And, it's one of those things where I said we have to get away from putting things down just because you don't like them. And just because I don't like it doesn't mean, that I'm going to talk badly about it. I just won't probably buy any myself. That's, one of the mentalities that we have to keep. This is going to be a casino type world, and we've got to let the players play. And unfortunately, that's part of the layer one business that we're in. So just my thoughts.
Yeah, it really sucks that there is like so much infighting and stuff like that. It's just, there's really no point because the market is the market. Yeah, there's going to be people that disagree on these two things. Some people are not going to want to dip their toes in. Some people, like I consider myself, are just kind of profit maxis and, start to maybe see the validity of it and throw a flyer in. And for a lot of the people that, are being described as Pulse or Hex maxis or something like that, they also should realize that a lot of the pDAI people are wanting to, throw a small lottery ticket in responsibly and then roll any profits back into PulseChain. Like that's what a lot of these people want to do. They're not all just meme coin players or something like that. So I think both groups kind of have a lot to learn from each other. And hey, again, it's a market. So if they decide that they disagree and one likes it and one doesn't, there's going to be back and forth. That's just the way it is. So, let's finish off with this. If you guys are still here, smash the like. We appreciate all of you guys watching this stream tonight here with Axis Alive. We do this every single Wednesday night at 8 p.m. Eastern Standard Time. Axis, I want to give you the opportunity. You talked to us about it in the green room before the show. You mentioned it a bit at the beginning of the show. First off, talk a bit about, I know you have a website, obviously. You are teaching TA. You have a TA course coming up. And I want you to talk a little bit about you just talked about interacting a whole bunch with PulseChain right now. Mainly, I imagine, because of the Axis token, what is going on there right now. But tell us a little bit about your course, your site, TA, and everything, and how you're actually pulling that Axis token on PulseChain into the overall idea.
Yeah, and then on top of that, Axis, tell us what you've actually learned by creating the token, providing liquidity, playing with it. Just tell us some of the interesting things that you've seen as a creator and what you've done to play around with that.
Okay. So yeah, for those that don't know, I launched a coin against my promises to the world. I thought I would never launch a coin, right? I was like, well, Hex Maxi all the way. Why bother creating another shit coin that had no use case? But I gave it some thought, and it didn't take a lot of effort. And I was just like, GoPulse.com, great website, allowed you to mint a token with a cap supply and a ticker. And I was like, well, how can I give back value to my members on my website? And so originally it started as just a simple rewards token that I airdropped to members of my website for participating in the boardroom Telegram chat and for coming in for the private video sessions to be participating in them. So they're learning about how to read the market and they're getting paid to do it, right? So it's like this kind of reward system for that they get to learn and gain at the same time. And so during this process of creating this token and liquidity providing for it, big shout out to Silver the Antidote, because he was kind of like my mentor in the early days of learning about liquidity. And it is not for the faint of heart. It is one of those things that it's very dynamic and there's a lot of ways to strategize and use it, and learn and building this coin and picking the tokenomics, meaning the scarcity of it and the cap supply and the no inflation and the amount of market supply, and then providing my own pulse as collateral to give this thing value from nothing, and then to like curate this chart that like did this insane run was like this educational experience that you can just not get unless you create your own token, so you can really execute it and see how the different movements affect price. And so I guess I can't give away all my secrets, obviously, because if everyone knew how to do this, they would probably try and replicate what I've already done with it. So just for those that don't know, the chart is like the best chart on PulseChain. It did like at the peak last night, we saw a $10,000 Axis token, and there was from the beginning, I think their initial price was 5 zeros and a 9. And to see that go from like fractions of a pulse chain coin all the way up to $10,000 USD, it was 300 million pulse per token on the peak. And to watch that and to curate that chart on the way up and then watch the market step in and try to change the direction of the chart, you know, it really makes you wonder like how much money's really out there and like and how easy it is to pump a coin or dump a coin, or you know, it really, if everyone was a good steward of their cryptocurrency, like crypto could go up forever because you wouldn't fuck over your neighbor. And that's what I learned about this whole process is like it's amazing opportunity for people to get involved, and you just have to find the right token projects. Now in terms of like the liquidity side of things, there's certain tricks that you can look for on chain. So like, and this goes into like what I'm going to cover in sort of my TA and quantitative and qualitative analysis, my chain analysis. That's all built into this 3-week course that I'm building out. And you know, no announcement on a date yet, but part of the content in there is understanding that there's way more to a price than the price chart. Like the price chart is what people see. It's an image of the past, but what's happening is happening in the ratios of two coins trading against each other, specifically with PulseX and the way the Uniswap V2 protocol, which is what it was forked from, how it operates, where it requires LP providers to always put up the current ratio of coins against each other. So if it's 4 PulseX for 1 pulse, you have to put up 4 PulseX for every 1 pulse you have. And if the price of one goes out of your ability to service that market, well, you can't provide LP anymore, right? Because you run out of the token you need to pair it against the token you want to pair it against. And that's the market at work, is like the market is always trying to catch people offside so that one guy or a group of guys can consolidate more and more of both as best of their ability as price swings. And the more volatility you get, the more crazy it gets, because you know, it's easier to get offsides. So I know I'm kind of rambling on about what this experience has been like, but honestly, like, if for nothing else, create a shit coin, make it, provide a little bit of like almost nothing to it, right? And just try adding LP, you know, pumping it with almost no money, and then removing it, pumping it, and then dumping, and just watch how the ratios affect the price chart. And like, if you can just do those few simple functions a couple times, it's going to give you so much insight into what's going on. And then you can go back and you can look at your actions on the chain on like PulseX info page, go to your pair, and you'll see like your adds, removes, your swaps, and like how that affected the chart. And then now go look at something that you care about, like Hex, and start tracking these wallets. Like use Deck Screener, track these wallets that are doing big moves on the chart and watch what they do. I'll give you an example of something I saw on Axis. Guy on Axis buys a coin. I think it was like 1.5 coins at $400 per token. And I think, I can't remember how much pulse it was at the time. I want to say it was like 5 million pulse. And then last night, the price goes up to $10,000 per coin. And someone sells it down, and then it goes sideways for like 2 hours. And then all of a sudden, this guy drops the price 60% in one candle. It was the guy with the 1.5 coins that bought at $400 that sold all of his coins at $8,000. So he realized over a 10x, I think it was like a 15x return. And he pulls out like, I might be conflating two guys. I think he pulled out. Now this guy actually pulled out 200 million pulse out of that trade. So like,
wow.
To roll it back, last night, 1 a.m. in the morning, a whale steps in. I don't know who this guy is. No idea who it is. Random on the blockchain. Comes in, starts throwing 8 million pulse a rack. Then it's all of a sudden it's 10 million. Then it's 12 million. Then 20 million. And the dude ends up putting in like 500 million pulse over like a 15, 20 minute period, and pumps the price from the $800 low all the way to $10,000. And then so then that's when this other guy comes in, and now you can get like 250 million pulse per axis at this point, because it's like $8,000, and he just hits the market sell button and sells 1.5 coins that he got for 4 million and pulls out like, I think it was like a 51x. I think it was like 200 million. So that same guy though, this is what I learned. It wasn't that I learned. This is what I learned was that same guy came back in on the dip, bought some, and then sent it over to a new address. And if you go back and look at the chain, you can actually track his activity. He sends it to another address, and then he starts accumulating access on that other address to try to make it harder to track him on Dex Screener. Right? And so as this goes on, like, people will try to obfuscate things and make it look like they're doing one thing or not doing another. And then you have to try to figure out the psychology of a player like this and wonder, like, okay, so this dude made a 51x. So for him, if he just brings back in 10% on the low, he could do it again on the next run up. And he could continue to support the price and do it again, support the price and do it again. And then that's what creates these floors in price. Now, is he going to do that, or is he going to sell out? I don't know. But I do know that the amount of available market supply for Axis is so small that if even if like a lot of the wallet holders dump today, Axis can't die. Like, there will still be a good price on it because like there's just nothing for sale. And it seems to me as if the trading demand's picking up, not going away after that big pump. So do not buy massive shit coin. It's just a rewards token. Not financial advice. Don't come after me. I just created my own private property. I have it on the blockchain. I could do whatever I want with it. No expectations, yada, yada. But it is an amazing educational tool, and that's what it was designed for, and that's what it will continue to be for my members.
Very cool.
That is cool, man. Yeah, and just learning that kind of behavior of different wallets like that has got to be really interesting. Like, really having the microscope on what kind of action is going on. So yeah, definitely a learning experience for sure. Mr. Welloff in the chat seems to be very intrigued by the Axis coin. So we'll see if he gets involved there. So well, hey, this has been great, man.
It does have a whale as an icon. He might be your guy.
Yeah, that maybe it is. Maybe he's playing dumb in the chat right now, acting like he doesn't know what it is or something. This has been great, though.
Ewok,
do you have anything?
So we can see.
Okay, yeah, here we go.
So,
oh my god,
hold on, let me get some. I don't know. Let me refresh it. It's pretty insane. Like, when I look at the chart, I'm like, what am I looking at?
Yeah, what is happening here?
So let me delete some. So this is what happened, like from 0 to 10,000 on the logarithmic chart. So what we had a few days ago was just something like this, a nice steady. Obviously there was that initial pump, and then some sideways action, and then just some organic growth over time. Just it slowly went from, like, right here, this is like $1, all the way up to $400, and that's when things started to really start to change. And now let me zoom down to like a 4-hour. Like, it looked fine on the linear chart. Like, we look at a nice clean chart. This is when things started to change, where activity changed and players started to come in and more volume. And so we went up to like from $400 to $600, and then that's when the insanity, like in the next like few 4-hour candles, like this guy came in and pumped it to, switch to an hourly maybe, pumped it to $1,500 here, and then I was just like, what? And it sold down to 800, and then I was like, well, if this stabilizes here, maybe we can just continue this trend, right? And we don't have to worry about massive downside. And then this is when that whale just stepped in and completely
annihilated.
Yeah.
Wow.
Just so you have to look at it on log, because
oh my god,
you just can't. There's no resolution otherwise. So it's just an incredible thing, man. It was a lot of it. It's exciting. It looks like there's about almost 300 million pulse in the pool. So I think the goal here is to just continue to reward my members, continue to use it as a tool for educating, and see where we go from here.
Absolutely. Hey, I mean, that, like we've talked about throughout the show, I mean, that's kind of what's going on PulseChain right now anyway. That's a lot of the stuff that's going on. So, I mean, kudos to you for getting it out there. It's a learning experience as well. And for, the course coming up. Yeah, I think people are starved for more education, like in this market. This isn't like the stock market, so we don't have people that are just, coming in DCAing and just have an idea of what they're doing. I mean, crypto is still, even though we're a few cycles in, I mean, it's just still the Wild West, and we're going to have so many people pouring in a year from now, 2 years from now, and providing a service like that, looking into TA and stuff, and hopefully what we're doing here as well, the streams we do and everything, all this education will help people as they come in over the next couple
100%.
of years.
And I want you guys to know that you guys have a really awesome interview style, and I find it to be very professional and like easy to have like a nice flowing conversation. And so props to you guys. You need more viewers, so you guys make sure you come support these guys. I've really enjoyed being on with you, and yeah, don't sell yourself short. I think sky's the limit for us. We're at the bare bottom. Learn your skills now. Like if you don't understand liquidity, now is the time to learn it. If you don't understand basic TA, now is the time to know it, so you know what to look for. When things get crazy, you can have a level head. All right. So I appreciate you guys so much for having me on. It's been a blast.
Yeah, we
Absolutely,
appreciate you coming, man. We appreciate it.
Thanks for the kind words for sure. Yeah, we try to pride ourselves on that, so we very much appreciate it. And you guys still here watching, smash the like before you get out of here. Obviously, you can subscribe to Alex Axis's channel as well. I'm sure most of you already are, but you can do it at Axis Alive. Same handle, I believe, on Twitter. Yeah, same thing there. So check it out. What's the website also, Axis?
AxisAlive.com. One word.
Okay. Bam. Okay.
Yep. It's all one. Yep. YouTube, Twitter. It's all the same.
There we go. So, hey, if you're not bullish after this stream, I don't know what the hell stream you were watching, because this one felt really, really good. So, hey, we appreciate all you guys being here. We do this every single Wednesday night, 8 p.m. Eastern Standard Time for Axis Alive, Crypto Ewok. This has been Boi Crypto. We'll catch you guys right here next week on the Creative Crypto Podcast.
Peace.